Hello guys, welcome back. So a couple of weeks ago I made an analysis about how we had our model. Here's our model. We rated sell side, and then after reading sell side we have our model, because this is a shift in market structure and a displacement at the same time. So we have price coming back to a fair value gap that was created, and of course for those who are position traders, they will be buying at this point. So sell side liquidity rated, a shift in market structure here, market structure shift, this is the displacement leg, and then price coming back to the fair value gap, and then we are seeing an bullish movement. Remember, price is fractal, so whatever happens in smaller time frames, in little time frames, happen in higher time frames. So everything we've been learning can be used in any time frame. This is a weekly time frame, so we're doing our weekly analysis for the week starting 15th, Monday, April 15th, for this coming week. So this is a weekly analysis. Now, what am I expecting this coming week? I am expecting bullish dollar. I forgot to mention, this is dollar index. It's denoted as DXY. So why am I analyzing the dollar index? Because whatever you trade, you must account for the dollar index. Whatever the dollar index does, most pairs will do the opposite. For example, this is the dollar index. Euro dollar will do exactly the opposite of what the dollar index is doing. Pound dollar will do the opposite. You have bullish dollar, every other pairs will be bearish. So this coming week I'm expecting bullish dollar, because we've attacked sell side, we have a shift in market structure, we came back to our entry here, and then we're coming up. We are attacking this low hanging fruit, which is this buy side. Might not happen this week, might happen next week, but here's our target, our first low hanging fruit target, for price to attack this side and then eventually this one. Now, in as much as we're going up, we want to be accounting for each fair value gap we see. We have a fair value gap here, yes, and then see, this fair value gap was not respected. Why? Because ultimately we are bullish. So whenever we have fair value gaps like this, we didn't respect it. Most times when we close above it, like we have done here, we call this an inverted fair value gap. That's why I noted it as IFVG, inverted, which is a fair value gap on the opposite direction. We are not respecting it because our bias is bullish. So since our bias is bullish, whenever we have an inverted fair value gap, it acts as a real support. So whatever happens and price comes back down, this is going to act as a real support to trigger price back up. At the same time, before getting here, we already have a fair value gap here. We went above, we traded down slightly into the fair value gap. We call this institutional order flow entry drill. Institutional order flow entry drill. So it's a form of fair value gap. The names of these fair value gaps, they do not actually really matter, but you should know that this is a fair value gap, was respected and projected above. And as far as we have price closing above this fair value gap, the high of this candle, the low of this candle, at the point we have price respecting it, coming back down, and then rallying above. As far as we have closed above this other fair value gap, it will act as a real support, which means in future when price comes back down, we want to see this inverted fair value gap respected before going back up. But that's if that happens before we read buy side. Yeah, but for the moment I'm expecting higher prices in dollar. So when we open next week, I would like to see price come down a bit and then rally up. We want to attack buy side. For daily time frame for the dollar index, we see that price is also going bullish. This entry for the weekly time frame for the dollar index, and then we have a fair value gap here. The high of this candle, the low of this candle. We didn't respect it. Why? Because we're bullish. In fact, we closed above it and we went higher. Now, immediately we closed above it. Look at what happened when price was coming back down. Price came back down and respected this fair value gap. But now it's now an inverted fair value gap. Look at the bodies of the candles. Look at how they respected the inverted fair value gap. Remember, the wicks do the damage. The bodies tell you the story. The wicks do the damage. We do not account for the wicks when we are talking about fair value gaps in this case. Now, if they don't do this, it will be so obvious to the public. But we have a fair value gap here. Price went above it, closed above it. Like I said, once we close above a fair value gap, in most cases, especially if our bias is on the opposite direction, it would act as an inverted fair value gap. We closed above it, we rallied up. When price was coming back down, look at how the bodies of the candle respected the fair value gap, which is now an inverted fair value gap, and rallied away from it quickly. The wicks do the damage, the bodies tell you the story in a fair value gap scenario like this. And then we went back again, we closed above the fair value gap, inverted fair value gap. Came back one more time, rallied away from it, and then we're here. This is what we saw. These fair value gaps are what we saw on our weekly time frame. Yeah, so we already talked about them in our weekly time frame. So that's all we can talk about for the dollar index. Meanwhile, on this same time frame, on a daily time frame, we're saying that here is our lowest hanging fruit. I'm expecting price to attack this coming week, and we should see that happen. Yeah, once we attack this, we should be we should have had our objective for the week for the dollar index. So let's talk about euro dollar. So this is the dollar index. Bullish is my bias. Then for euro dollar, the opposite, obviously, like I said, is my bias. Remember, whatever the dollar index does, the opposite is what would happen for the euro dollar. And then several weeks ago, I did some videos. We saw how price came bullishly and respected this volume imbalance. A volume imbalance is when we have two candles. Yeah, we have a gap between two candles. It's different from if a fair value gap. Yeah, these two candles, we have this candle here, closed here, and then the next week we have a gap. Of course, we saw wicks overlapping each other, but there is still a gap here. Later in the future, we'll see price coming to respect that gap, and that's what happened here. So once that happened, we saw price reacting from there and then going to the opposite direction. Before then, we rated buy side. And then there is a displacement and then a shift in market structure, which gave us our model. Of course, there's a fair value gap here. We came back up, respected the fair value gap, and we're coming down. Remember, this is on a weekly time frame. This is why I said price is fractal. Whatever you see in 1 minute, in 5 minutes, in 15 minutes, 1 hour, it's on all time frame. So we rated buy side, traded into a PD array. What sort of PD array? Volume imbalance that I showed you. Yeah, and then there is a displacement. A fair value gap was formed, a shift in market structure, and we came back on a weekly time frame and respected this fair value gap. Remember, the wicks do the damage. There's a little bit of overlap here, but that's totally fine. And then we reacted from it. Now our next target is this sell side. This coming week, I would like to see price raiding this sell side as our first objective. Yeah, once that happens, I would not be trading for the week again. So I'd like to see price raid this sell side, and then once that happens, I would have met my weekly objective for the meantime, until we get more instructions next week. So this is for the weekly time frame, and for this is how you do top-down analysis. You start from a higher time frame. Now, daily time frame. Yes. So these are price annotations for the weekly time frame. Yeah, this is a fair value gap for weekly time frame, but you won't see that on a daily. Now on our daily time frame, we know that okay, we are bearish. There is a fair value gap here. We have a high. We have this low here, and we have this high here. Let me quickly zoom in. We have this high here, this low here, and this high here. There is a gap between here and here, and we saw price. Let me just quickly mark that out. My daily time frame, I like calling that green. Yes, this is a fair value gap for a daily time frame. So we saw bearish price movement. This fair value gap was respected, came back, tested it again, and then we're moving down. This is an order block. Yes, an order block. This green candle is the last up close candle, and then we saw price coming back down, coming back to respect the order block, and then we moved away from it rapidly. So even on our daily time frame was still bearish. Here is where I'd look for us to attack this coming week. So that's for euro dollar, and then finally for pound dollar, I am still bearish. So we've been bearish, and we came here, rated buy side here. There is already a shift in market structure here, and then ultimately this is where I would like to target. This would likely not happen this coming week because there is a bit of distance between where price is currently and the target. But still, I'm looking for bearish price movement for pound dollar, and coupled with the fact that we are reacting from a fair value gap, a weekly fair value gap. This is low here, this high, and then there is this displacement candle and the gap between. We saw price this past week respecting this and then aggressively moving away from it. So this coming week, I'm expecting lower price movements. And coupled with the fact that the dollar index is bullish, so we have more reasons to be bearish on pound dollar. Daily time frame, and then for our daily time frame, we saw that for a while we had so much choppy price movements until we've broken away from that consolidation or this range. On our daily time frame, there is an inverted fair value gap here. I said a fair value gap is when we have a high and then a low and then one straight move where we have a long candle and there's a gap between the high of this candle and the low of this candle. Usually we're supposed to see price come back and respect this fair value gap and continue upward, but since we've broken it, price came back up, and this fair value gap is, as far as we close below it, it's referred to an inverted fair value gap, and we came back up and price respected this inverted fair value gap. Look, just a little gap above the fair value gap, and that's quite permissible. Remember, the wicks do the damage, the bodies tell the story. The bodies are just inside the inverted fair value gap, and then see how price aggressively moved away from it, coming back to a weekly fair value gap, and then running that back down. And on the daily time frame was still bearish, and I would like to attack here first, and then attack here, and then finally here. So that's how much we can take for now. So what can you do with this information? Of course, price is fractal. Price is all about buying and selling. We are bearish for this coming week, but it doesn't mean you can't take buy positions. What this simply means is that when you take buy positions, make sure they are short-term buy positions, but you can keep your short positions as longer term. You can hold them for a longer time, and until we hit the target. This is something you can do with this information, and I'll try as much as I can to be a bit regular with this weekly analysis. I hope you find this really insightful, and if you do, you might want to leave some comments below.